I think, are just going to head ballistic from here. Silver just hit a new all-time record high. It's above $51. We finally took out the peak from 1980. I think we're going to be at 100 pretty quickly. We could even be at 100 next year. And I think gold, which is now above 4,000, has a shot at 5,000 by the end of the year. But it may not get that high this year, maybe 4,500. But I think 5,000 is definitely in the cards for 2026. In fact, we could be at 6,000 or higher next year in gold.
Renowned economist and investor Peter Schiff has long warned of the financial shifts now unfolding in real time. As he explains, silver's surge beyond its 1980 peak, hitting over $51 an ounce, marks the beginning of what could be a historic breakout. The momentum, he suggests, is only just beginning. Schiff believes silver could double to $100 sooner than many expect, potentially even within the next year. Gold, too, is showing its strength, trading above $4,000 and eyeing levels of $4,500 to $5,000 by the end of the year, or even $6,000 in 2026. His insights point to a rapidly changing financial landscape where hard assets reclaim dominance over fiat currencies. As markets shift and confidence wanes in traditional systems, precious metals are once again stepping into the spotlight. If you want more financial insights like this, make sure to like and subscribe for the latest updates.
Well, we've made it clear that China is our enemy, right? And so China recognizes that, despite the fact that they're our biggest supplier of goods and one of our biggest lenders, right? So talk about biting the hand that feeds you. We have owed a lot to China, and we've basically framed them as our enemy. And so why would our enemy want to hold its reserves in U.S. dollars and U.S. treasuries where they're extremely vulnerable? So I think China is completely divesting. It's on that path of replacing its dollar reserves with gold reserves so it can truly have an independent monetary system. I think eventually they're going to depeg the Hong Kong dollar from the U.S. dollar and maybe peg it to an RMB that I think ultimately will be backed by gold. I think the Chinese are headed for a Chinese currency that is backed by and maybe even convertible into gold, just the way the U.S. dollar was at, once upon a time. I think that is the direction that they're going. And, China is the world's biggest gold producer. So they have a lot of gold in China that they're producing. They just don't export any of it because the Chinese government buys it as fast as they could dig it out of the ground. I think what you're seeing is the acceleration of de-dollarization that began really a couple of years ago. I think what started it in earnest was the Biden sanctions against Russia, which really was a wake-up call for the rest of the world that they need to get rid of dollars. They need to have a more secure reserve that can't be just confiscated at the whim of the United States. And then I think it accelerated with the election of Donald Trump and the complete reckless and irresponsible spending by the Trump administration, despite the fact that Trump campaigned to try to do something about the reckless Biden spending. He made it worse. The big, beautiful bill just expanded on the excess spending and made it clear that we're never going to get our house in order. Then on top of that, Trump imposed the tariffs and vilified a lot of our trading partners for basically participating in the dollar's reserve currency status. And he's beating up the Fed about how stupid and what a moron Powell is, and we've got to slash interest rates, and he's trying to fire the FOMC members that he disagrees with so he can put his own cronies up there. So really throwing into question the independence of the Fed. And so we've basically told all the foreign central banks, get out of dollars, get out of treasuries. You're going to get wiped out to dollar debasement and inflation. And where are they going to go? There's only one alternative, one viable alternative to the dollar, and that's gold. They're not going to, move into euros or pounds or Japanese yen or RMB. Gold is the one monetary asset that all these central banks can rely on. It is the system that dominated pre-Bretton Woods, and even in the initial years of Bretton Woods up until 1971, even though the world was using the dollar was redeemable in gold. So the world was still backing its currency with gold, even though they did it through the US dollar. But now I think just like we went off the gold standard in 1971, the world is going off the dollar standard, and it is going back on a gold standard. And now what's also significant is Wall Street has finally woken up to this reality. And now you're seeing major Wall Street banks that have never recommended gold now saying that their clients need to have exposure to gold, whether it's 10%, 20%. It's now something that, mainstream investors are finally going to start to participate in. And, prices, I think, are just going to head ballistic from here. Most people have done better in gold than in the stock market over 10 years, 25 years. And they're certainly doing a lot better in gold this year by a long shot. They keep talking about the record highs in the stock market. This is one of the worst years ever for the U.S. stock market if you price it in gold. So gold investors are doing a lot better. But my point is that now, finally, people are not getting laughed at for recommending gold. Right now you have, okay, yes, maybe we should have gold in a portfolio. Yes, right. They should have had it in their portfolio 25 years ago. All right. But the fact that they're now starting to include it, not only does that, basically validate what I've been saying all along, but it means that the demand for gold is about to go through the roof because central banks are going to keep buying. They have a lot more gold to buy than they've already bought. But now they're going to be competing with private investors, both institutional and retail, in this market. And, I have this gold company called Schiff Gold, and sales for the last 3 years have been very lackluster. I mean, it's not like gold has been going way up. It's doubled, more than doubled in the last 2 years. Yet business has been slow because people were afraid that gold's topped out. I don't want to buy the highs. So a lot of the normal buyers have been on hold. Now everybody is starting to realize that the sky's the limit on gold, that there is no top because there's no floor to the dollar. That's really what's happening. The dollar is going to be losing a lot of value as we open up the spigots. The Fed is cutting interest rates into rising inflation. Not only is inflation well above the 2% target, but it's headed in the opposite direction. It's going up. Yet the Fed is cutting rates anyway. I think by next year, they'll be back at QE because they're going to try to keep long-term interest rates from rising, which is what they're going to do. We're going to see a backup in interest rates as the world sells treasuries to buy gold. In fact, you mentioned, Morgan Stanley said the 60-40 portfolio should be 60-20-20, where you cut the bond allocation in half. So if all these Morgan Stanley clients sell half their bonds, which would be a lot of U.S. treasuries to buy gold, not only does that push gold up, but that pushes treasury bonds down and pushes yields higher. And the Fed doesn't want higher yields. Trump doesn't want them. So the only way to bring them down is massive quantitative easing, which is just going to drive even more demand for gold because all that is more inflation and more reasons to get rid of your dollars. The Fed is going to maintain 2% inflation is now a complete fiction. Nobody believes that anymore. I don't even think the Fed believes it. And I don't even know that they have a target anymore. In fact, the only reason they had a 2% target was because we were below 2% for a while. And so they invented that target as an excuse to create inflation. But now that we're well above 2% and they still want to create inflation, there is no target. But people are appreciating that fact, and they're starting to get out of dollars and into other assets, whether it's, gold, stocks, or, crypto. I mean, I think the people that are choosing Bitcoin are making a mistake, but they're choosing it for that reason. They think they're getting out of the dollar into something better. And the CPI, right? When you're looking about inflation, the CPI is a very flawed measure of the effects of inflation. And that is by design. It's not a coincidence that the government designed a methodology for tracking inflation that understates how much inflation there is. Because the government creates inflation on purpose. Inflation is a tool that the government uses because it solves a lot of their problems. Of course, it creates problems for the people, but governments love inflation. But since the people don't, government wants to create inflation, but not let anybody know how bad it is. And so, that's why they shouldn't be the ones that track consumer prices, but they do. So the CPI doesn't really capture what's going on. So if you look at the CPI and, prices are going up 3%, that's not even close to reality. You have to at least double it, if not more, to get a more realistic, assessment of how much prices are going up. But what really is inflation is not prices rising. That's an effective inflation. Inflation is an expansion of the money supply, which includes credit. So as we get more money and more credit into the economy, that's inflation. And we have massive, not only monetary growth, but credit growth. And that's what's fueling the debasement of the US dollar, which is why prices go up. And it's why people now want to get out. They want to get out of their US dollars and into something that will retain its value.
Renowned economist Peter Schiff delves deep into the accelerating global shift away from the US dollar. As tensions rise between the United States and China, he explains that Beijing is rapidly divesting from US treasuries and accumulating gold to establish a more independent, gold-backed monetary system. This, he believes, signals the end of the dollar standard and the return of a global gold standard. Schiff points out that de-dollarization gained momentum after U.S. sanctions on Russia and reckless government spending under both political parties. Now, with inflation rising and central banks worldwide dumping treasuries in favor of gold, Wall Street is finally acknowledging what Schiff has long argued, that gold is the only reliable store of value in an era of endless money printing and monetary instability. Let's get into the interview.
I think if investors get more risk adverse, they're more likely to want to buy more gold, not less. So if we have an overall decline in the stock market, the gold bull market can continue. But the Bitcoin rally can't, because Bitcoin is going to follow other risk assets, because at the end of the day, that's what it is. It's not a safe haven store of value the way gold would be. It is a highly speculative asset that people buy because they think other people will pay more for it. And that's, the same dynamic that drives a lot of momentum stocks. I mean, they get, devoid of the fundamentals. People aren't buying momentum stocks because they have a good dividend yield or because they have a low PE. They want to just jump on a moving train, and they're afraid to not be on it because everybody else is in on it, and they want to get these paper gains. And so that's the same thing that's happening with Bitcoin. But there's a big risk that dynamic can reverse. And I think the biggest risk for Bitcoin is all the money that has piled into Bitcoin ETFs that came out of gold ETFs, that came out of gold stocks. A lot of those investors may well try to switch back. They may try to say, you know what, I sold my gold stocks and I bought Bitcoin ETFs. I would have been better off if I just stayed in my gold stocks. Maybe I'll go back to them. I think I got rid of them too soon, and there could be a lot of selling. And then you have a lot of these, Bitcoin treasury companies that have also been the big buyers of Bitcoin. I think that whole trade is going to blow up. And a lot of these Bitcoin treasury companies are going to go out of business. And when they have a going out of business sale, what are they going to sell? Well, they only have one thing to sell, their Bitcoin. So, there's going to be a lot of Bitcoin for sale. I don't think the U.S. government's going to step up and buy it. I think that's all a bunch of hype about the strategic Bitcoin reserve. So, there's a lot of downside risk in Bitcoin. I don't see a lot of downside risk in gold at all. I see a lot of upside potential, though. Not only is that the same, but it's actually worse. Yes, we've added on tariffs, but I don't like tariffs. I mean, I'm a free trader, and tariffs are taxes. We need more taxes, unfortunately, because we have huge deficits. But the tariffs, the way they're being operated, are just going to make American industry even less competitive. And it's going to result in the manufacturing sector, what's left of it, shrinking even more. But what I particularly don't like about the tariffs, too, not only the unconstitutional way that they've been imposed, because they really need to be imposed by Congress and they need to originate in the House, because they are taxes, and that's how taxes are supposed to be raised in the United States, not enacted by a president, but passed through Congress. But I don't like all the exemptions that are being thrown about and how Trump uses the tariffs as a weapon to try to get companies to give concessions or to do things that they might otherwise not do, but for the extortion of, well, if you do this, we'll exempt you from tariffs.
Peter Schiff warns that the growing risk aversion among investors could fuel a stronger move into gold while leaving Bitcoin exposed. He explains that gold remains a true safe haven asset, backed by centuries of trust, whereas Bitcoin behaves more like a speculative momentum trade, thriving only as long as optimism lasts. Schiff highlights that many investors shifted from gold ETFs to Bitcoin ETFs, but as market sentiment changes, this trade could unravel quickly, with massive selling pressure driving Bitcoin prices lower. Meanwhile, he foresees continued strength in gold, offering stability amid global uncertainty and reckless economic policies. For more financial insights like this, don't forget to like, share, and subscribe.